Hey, my name's James Nicholson and welcome to this channel. Now in this video we're going to talk about the August 2022 property market update. You guys have been loving these videos, so we're going to keep them going every single month. Now this channel is also about my property investment journey, so I'm building a portfolio at the moment and I'd like to invite you to join us on the journey, but also I'm building a portfolio for my two daughters. I've got Georgia, who's 21. We've just completed our first deal. We're just about to complete our second deal. You'll see all of that on the channel, everything that happens. And we're building a portfolio for my little baby, Amelie, who is just one. So take that finger of power, smash that subscribe button and hit the bell notification and join us on the journey. Find the good, the bad and the ugly about property investing. Now, we're in August and what is going on in property? Well, the market on average for the year is 11% up, which is still pretty crazy, right? And lots of those like exceeding prices and stuff like that has happened a while ago. But from what I'm reading in lots of different papers and stuff like that is that some people are expecting the market could rise yet another 7% this year, which is pretty good for property investors. Now, inflation is still really high, and inflation does, on the whole, cause property prices to also rise. So that could partially be down to that. Now, inflation as well is also good for property investors. It's not great for us, as in those that have to pay like bills if you've got an HMO or something like that. So your energy costs will have gone up, and obviously cost of living for everyone is gone up, which means it's tougher for your tenants. But the debt that you've got is getting eroded by inflation at the moment. So if you borrow 100 grand and inflation is at 10%, the buying power of that 100 grand next year is only really 90 in real world terms. So if inflation stays high, it's not particularly bad for property investors. Now, what could be more difficult is the rises in the interest rate. So we're going to have a big one in the next few days, I'm sure. And so we're looking at a potentially half a basis point by the Bank of England increase, and that is starting to cool down the market. So looking around, the market is cooling down for sure. Estate agents are finally admitting this as well, because they don't like to talk about a market cooling down. They like to paint a rosy picture. Of course they do, right? Because their job is to sell houses. So they got to talk the market up. But estate agents are coming round to the realization that the market is slowing down for sure. And so there are some pockets where people have reduced their asking prices, particularly in the southwest and Wales. And so people are asking for around 2% less. It doesn't mean that the market's crashed 2%. What it does mean, though, is their asking price. We don't know what they're going to sell for yet. So it could be that they sell for 5% less. And so we'll see that data as that comes through in the next few weeks and months. But definitely the market is cooling down. Now, that doesn't necessarily mean there's going to be a crash. So potentially that just means that the market will just stagnate for a period of time till we get through this inflation and start looking out the other side on what we can do to achieve house price growth again. So I think that the inflation will carry on for a prolonged period of time. I think it's going to be at least to the end of this year and next year. And so that, as an investor, I'm pleased that my debt is less valuable. But I also want to make sure that all my friends and family can afford the cost of living, because that's an important consideration as well. What else is going on? So a lot of people are thinking that investors are probably going to flock to the northeast, and that's because the yields are higher there. Like, you can make really, really good yields, and whatever happens with the market up there, that will continue. So I think that's going to be a good place to invest for the next few years. And I think prices won't drop massively in the northeast because they can't. They're very cheap anyway. People only need like 1 times their salary or 1.5 times their salary to be able to afford a property in the northeast as it stands. So they're not over leveraged as they are in the southeast. or London or places like that. Now, what else is going on? Now, Bank of England is going to be raising rates, as we said, for the rest of the year. That's going to make the market slow even more. So there'll be definitely less transactions. If you're an investor, I would be looking to get your rates fixed for 5 years. I think it just gives you that certainty. Interest rates are still very low. The market still has good fundamentals. There's lots of good positive stuff in the market. And I think regardless of what happens in the market, whether it goes up or down or sideways, when you're an investor, you're looking to make money when you enter the deal, not when you exit the deal. And so you will still be looking for those opportunities, and those deals will protect you regardless of what happens. And borrowing is still very, very cheap. It's going to get more expensive. And so now is a good time to keep investing, keep getting some deals. And I think that the market in the next 6 months is going to start giving a lot of opportunities to investors. There are going to be other investors that are just tired. Landlords, for example, the deal that I'm buying with Georgia at the moment, we're buying off a tired landlord who's just really, his major concern is these new EPC rules that are coming out in 2025. So by 2025, they're saying that to rent a property, the EPC, the Energy Performance Certificate on the property, needs to be a C or above. Now, that means that people have got to do considerable work, insulation, new boilers, and all these things to get that energy rating higher. And so that's a real consideration here for people when they are looking to keep property or offload it. And this landlord just wants to get it out. He feels the market's peaked for him as well. He's in his 70s, and that might be true. Right, that might be true. It might be a good time for him to sell, but it's a good deal for me to buy, and I'm looking forward to taking that on and moving that forward. Now, there are going to be tons of other landlords like that that are frustrated with all of the new legislation that's coming out, and all of this stuff means there are opportunities. People wanting to exit the market means that you can pick up some good deals and really start your investment journey if you haven't already. I'd like to know what you think about what's going to happen to the market for the rest of this year. Do you think we'll see the downturn this year? Do you think we'll see it next year? Or do you think we'll survive and we'll just have a fairly flat market for the next few years? I'd love to know your thoughts on that. So do comment below. Give me a quick like on this video. That really helps with the YouTube algorithm. The YouTube gods love likes, and that really helps as well. And I've mentioned this in other videos. We're considering running a live event in London. And if you would like to come to that, just say, I would be interested in coming to your live event, or I'd come to London, in the comments, just so we can get an idea. We only really want to run it if we can get at least 50 people, because it's a lot of time and effort to run an event. So I'm not doing it if there's just 3 or 4 people interested. I want to see some real numbers. So do comment below and let me know if you would come to that. And if you haven't checked out my Facebook group, that's in the description below as well. Now, I'm James Nicholson. Do go check out my other videos. This one here will be particularly good for you as well. Thanks for watching.